I think we're in a non-essential bubble. Everything seems important, so of course, nothing is. Greg McKeown. And that is exactly what the press wants you to think. That nothing's important because everything's important. My friends, the only thing that's important, the only thing you need to pay attention to, and I harp on it day after day after day, because I am harping on it in complete opposition to everything you see on the news, you read in the financial media, all the ways they try to suck you in to what it is they're trying to sell you. I want you to do one thing, and that is to follow price movement. That's all we do here. We simply follow price movement. We discourage you from wasting your time listening to the talking heads trying to get a hot tip. You won't. Up in Wall Street, there is a saying, buy on the rumor, sell on the news. So what do? Do we try to buy on rumors and sell on news? No. We follow trends. And those trends are easy to see when we have weekly vertical crossovers, as we had on our S&P chart going all the way back to the 5th of May of this year. We had the crossover going up, and it has been beautiful. We recently had a 2-day recross, and it has been beautiful. So let's jump into these charts. We're going to go through them. And again, I want to just encourage you to keep the faith. Every day, 10 to 15 minutes. You can do this. It is not rocket science. It is charting art. Let's jump into it. We see the S&P 500 is the only of our 4 major ETFs that we follow every day that is up for the day. The S&P is. Now, as we look at the S&P, we see the green candle forming, little bitty wick on top, price percent oscillator. We can tell has lost a little bit of its energy going up. Derivative oscillators gaining some momentum. We go to the 2-day chart, and of course, what do we see here? First day of the latest 2-day candle, the high on the candle for Friday was 334.88. What do we see? 335.77. So again, we 334.88, 335.77. We've gone a little higher during the course of the day. Price is moving right up that 2-day trend line. It is well above the weekly. We see the 2-day price percent oscillator still moving up, derivative oscillator 2. We jump into the half-day chart. What do we see there? Well, we see up movement in the morning, about the same, going higher a little bit in the afternoon it appears. But look at that price percent oscillator flattening. Derivative oscillator peaked back on the afternoon of Thursday, the 6th of August. So again, that means that things are slowing down as far as price movement goes. What our price percent oscillator does is it is, of course, a percentage version of the MACD, the moving average convergence divergence indicator. It is our lagging indicator. The leading indicator is the triple smooth version of the RSI, the relative strength index. That's what the derivative oscillator is. You can read about it in our book. If you want to buy a copy, there's a link in the show notes. You want to support the program. You know, the stuff that you support tends to stay around. The stuff you don't support tends to go away. We appreciate the thousands of you that have purchased our book, and I want to encourage you, if you don't have it, to get a copy to understand this stuff better. But when you see devolution in the derivative oscillator, it means that as far as price movement, even though it may still be going up, the rate of increase is what's slowing down. Does that make sense? That's why it's our leading, not our lagging indicator. That's why we use both of these, and only these, as far as indicators go. There are literally hundreds of indicators that you could pick from. And well, not hundreds, I'd say dozens of indicators. And you know what? You know who has them? FreeStockCharts.com and TC2000. They have them all. I have people all the time saying, I use Thinkorswim, but I can't find the price percent oscillator. Right, you can't. You can't find a whole lot of things at these other places. And again, for a few dollars a month, you can subscribe. We have a $25 off coupon. Why don't you use that coupon and subscribe to TC2000 and get all the cool benefits of having all the indicators you might ever want to choose, particularly the price percent oscillator and the derivative oscillator. Now let's keep moving. That's where we are on the S&P, our only chart that's up for the day. Let's move on to the Nasdaq 100 down 0.4 is that 4.3 or 4.7? Let me see, 4.3%. Okay, so what do we have the week starting off with? A red open box candle. Now, is that a solid red down candle? It's not. It means a slowdown in the up movement as far as our Heiken Ashi candlesticks go. We see the price percent oscillator, though, flattening as the week starts, just flattening out as it did back on the week beginning the 17th of July. Then it went up after that. So again, we're just watching. Derivative oscillators lost a little bit of momentum too. Go to the 2-day chart. Look, we were hoping there would be a 2-day recross, my friends. It did not happen. That's interesting. That's telling. There was not enough energy to recross to give us a jumping in point like we got on the S&P 500. Remember when we had that occur back on the 3rd? Jumping in point somewhere around the 326.43 up to a high of 335.77 in 5 days. That's pretty good, isn't it? That's when a 2-day recross works. We didn't have a 2-day recross initiate here because of the slowdown. We have a red spinning top, means indecision. Again, it's not a solid red, but it is showing us some indecision on that 2-day chart. We go to the half-day chart. Down in the morning, really plumbed some depths there in the morning and then recovered a little bit in the afternoon for a down day of 0.43%. Now we move on to TLT, 20-year bonds down 0.45%. And we're going to start, as we always do, we're going to start with the weekly chart. Now last week a red open box candle rather, which means a slowdown in the up movement. Now how are we starting this week off? Again, still open box, but really small, almost a doji. A red spinning top, more indecision, and we thought we just kept thinking we might have a crossover going up, but no. It just paralleled, and now it's slowly moving away. Now, that's just Monday, just the first day of a weekly candle, so we're not calling anything off of that, but sure is moving away. Go to the 2-day chart, check it out. Trying to cross over, going down. We'll see if that occurs. Now, what does that mean if we have the 2-day crossover at the end of the day on Tuesday? If that crosses over, my friends, that is called a 2-day recross. The weekly's still in a negative position. So if that occurs, it might give you a chance to short TLT. So you might want to practice trade that. You can practice trade it with the inverse fund for TLT. You know, I'm going to put the end of today's program. I'm going to put inverse funds, how to make money, practice trade money when markets crash. I want you to watch that. I'm going to put that at the end of today's video. I'm making myself a note to put inverse funds in there for you. If you've not taken that training, it's super popular. It's free. It'll be at the end of the program today. I want you to know what it is. Is it TBT, guys? You're going to have to help me. I think it is TBT. Yes, that is the short of 20-year bonds. And that says it's ultra short. It's TBF. That's what it is. TBF, I believe. That's just the short. I'm not a fan of ultra shorts. This is the inverse. So look at what it did over the course of today. On the 2-day chart, you've got a green open box candle. Why? Because it's the inverse of TLT. So again, might be something for you to practice trade or a put. So just watch, see if there's a 2-day recross. There may be, there may not be. If there is, do it. If there's not, don't do it. But again, just practice trade it. Learn from your practice trades. And how do you learn best? Print out that trade worksheet. It's for free. It's in your show notes. If you're not a subscriber to the channel, go to chartingwealth.com, sign up. Every day you'll get the email of our daily reviews, and guess what's in there? You'll see the PDFs for the daily market worksheet, weekly market worksheet, and trade worksheets. And I'm going to put also the training on how to fill out the trade worksheet. I have one of those also. I'm going to put that. I'm writing this down. I'm going to put that in at the end of today's program for you. That training will be there too. So, what do we see happening? We see 2 days worth of pretty strong down movement in bonds, price percent oscillator moving down, derivative oscillator gaining downward momentum on that half-day chart. That's where we are. Lastly, on our big charts, down 0.35% today is gold. Gold has not reached a higher high on the first day of this latest weekly candle. It is above the weekly trend line. You can see where it's below the 2-day. We'll check that out in just a minute. And look how the price percent oscillator is losing momentum. It's not going up at the same angle that it had been. That's just the first day, but that's what's happening. And we see the derivative oscillator continuing to move up. Go to the 2-day chart. What do we see there? Well, we see a blow-off of some steam. We haven't seen a red open box candle in quite a while. That's what's forming the first day. Now, it could change tomorrow if it's an up day, but you can see where gold lost a lot of steam. Price percent oscillator flattening, derivative oscillator losing momentum for the first time in a while. Go to the half-day chart. You can see where things started moving down on Friday morning, then Friday afternoon, then pretty much a doji stable in the morning on Monday, and then rolling over, going down some in the afternoon. Not a lot, 0.35%, but keep that in mind. Folks, that's where we are as we end the day on Monday, first day of the week. We still have a 2-day candle in play. Thing to keep in mind leaving here is watch for a potential 2-day recross going down on TLT. Keep your eye on the prize. Be careful about what's happening with the Qs. The only thing up for the day was the S&P 500. We have that 2-day recross in play from when it occurred 5 days ago. And of course, we're keeping our eye on gold. That's where we are. Now, for those of you who are only interested in those 4 big charts, you're done for the day. God bless you. Have a great evening. And be ready to jump into a good practice trade tomorrow if one presents itself. Now we'll move on to Bitcoin for the others who are interested. Bitcoin up 2.51% for the day. And again, Bitcoin's high last week was 11,845, 11,922, so reached a higher high. Price percent oscillator moving up. Looks like it might have lost just a little bit of momentum. Derivative oscillator heading up, 2-day chart. Again, we are hitting a higher high, not a huge candle starting off, nothing like we saw back on Monday and Tuesday of last week, but again, going up. Price percent oscillator, derivative oscillator losing a little bit of momentum. Go to the half-day chart up in the morning and about the same in the afternoon. So that's where we are on Bitcoin. And again, interesting to watch. Of course, we had that 2-day recross. For those of you Bitcoin fans who've been following it, jumping in point was somewhere around the $10,765 mark. How well have you done? Well, up to a high of 11,922.35. That ain't bad in how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9. Not bad. Not bad. Not bad. Okay, let's keep moving. We're going to go to real estate, up 0.16%. And again, we look at that weekly chart and real estate's trying its best. Derivative oscillator gaining a little momentum. And we see we reached a higher high today. That's okay, even though it's 0.16%. Not much, but hey, take what you can get. Look at that 2-day chart. Derivative oscillator moving up. Price percent oscillator still moving up. We can see things flattening a little bit in the afternoon after up movement in the morning. But again, we see real estate, again, just trying to claw its way back, but still hasn't reached the high that it was back on about mid-month in June. So, but we still see positive signs of life. I don't know how, but you know what? Mine isn't to question why it's happening. Mine is to follow price movement. Let the indicators tell me what to do. If you try to figure this stuff out, folks, you're not going to do well. You just have to follow the indicators. Okay, that's how you figure out what's happening. All right, what do we see going on with oil? Well, we see that oil is up for the day, 1.04%. That's beautiful. Hasn't reached the high, though, that it reached last week of 31.02. The high throughout the day, $30.36. Derivative oscillator still losing momentum, but that price percent oscillator is trying its best to keep pulling away from the red signal line. That's good to see. We see the first day of the latest 2-day candle. Again, not reaching the high that it reached on the 2 prior candles, but we still have tomorrow before that candle finishes drawing. And we can see the price percent oscillator is not quite flat. Derivative oscillator gaining momentum. Half-day chart, flat. up in the morning, about the same in the afternoon. So again, keep your eye on the prize. Okay, folks, because I'm feeling good, we're going to take a quick glance at silver, up 3.09%. Look at it slamming up as the week starts. That's nice to see. Losing a little bit of momentum on the price percent oscillator, but that derivative oscillator kicking up. 2-day chart, again, not as big a candle yet, but we got one more day to draw. It is just peeking through the Bollinger Band. That is the volatility band. Price percent oscillator heading up, derivative oscillator losing momentum. See, up in the morning a little further, well, peaked in the morning, but again, trying to track up a little further in the afternoon. Price percent oscillator flat, derivative oscillator losing momentum on that half-day chart. That's where we are, folks. God bless you, my friends. Buy the book, support us. What you support tends to stay around. If you appreciate what we do, how about helping us out and being a Patreon member? We got a lot of expenses and costs here from the texting service. Of course, our monthly upkeep on our website, producing these shows every day, the graphics, the stuff that we do. So any help you can give us, we so appreciate. Pay it back to you in spades, folks. We're here every day for you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Subscribe to the YouTube channel and the daily reviews at chartingwealth.com.